And welcome to another Week Ahead interview where we take a look at the data releases that could be affecting currencies. Today I'm joined down the line by William Robbie, Fund Manager and Currency Strategist at Forex Global Solutions, to take a look at this week's events. William, thank you for joining me. Firstly, what events will you be watching this week that could shake up currency markets?
We have a number of catalysts in the week ahead that we can look to for tangible influence over the dollar and the broader investment trends. At the top of the list is the FOMC rate decision. The U.S. Central Bank announced its plans for cumulative $85 billion per month purchases for treasuries and the MPS, cementing the U.S. as the most pervasive and active stimulators in the market of easing. The second is the fourth quarter U.S. GDP figure will be a big-ticket item. The IMF downgraded not only U.S. growth forecasts this past week, but those for much of the developed world as well. A significant miss here could bring an otherwise conveniently overlooked problem to the forefront January. The third would be NFT, carry a similar weight as one of the key targets for policy moving forward. The Fed is targeting a 6.5% jobless rate. Employment data can carry still stimulus and therapy risk expectations on a substantive surprise, which is really can't be expected at the moment.
We have a heavy load of US data out this week, so markets are set to be busy. How will this information affect the dollar in the short term?
The dollar index ended last week at the month high, a positive correlation between the world's most liquid currency and the most heavily traded pairs as extraordinary, and extraordinary doesn't last in the markets. Therefore, one of the critical questions facing FX traders is whether the dollar's individual strength or the euro with US dollars striking rally will break first.
Investors are still waiting for confirmation that growth is returning to Europe. Do you think some of this will come in any form from the data releases this week? And what do you see from the euro?
Really, that's really interesting question. As you know, there was an unusual contrast this past week where the euro with US dollar advanced to its highest weekly close in 11 months. The ECB introduced long-term refinancing operation program aimed at injecting cheap 3-year funds into the region's banking system. Estimates for how much money will be repaid range from 100 and 250 billion euros. A sufficiently large sum can be seen as a positive sign that the region financial system is stabilizing and the funds aren't needed anymore. I can say that too much return could smack of excessive optimism that could invite a return to crisis. And I'm seeing for the euro, I would focus on break above 1.35 resistance target at 1.38, 1.41, and 1.45. Fail to break 1.35 would face a support at 1.33, 1.30 and 1.28.
Sterling fell to an 8-week low against the dollar on Friday after weaker than expected retail data added to concerns about the British economy. The currency also took a hit due to uncertainty over Britain's relationship with the European Union. What is your short-term sentiment on the pound?
The sterling has made a serious strides against key counterparts over the past week. In the past month, the pound has plunged 2.1% against the dollar, 3% versus the Australian dollar, and 3.6% when versus the euro. we have seen a shift towards UK-EU decision, a shift from policy official towards more stimulus and fear of deteriorating growth take hold. So Jennifer, I would focus on break above 1.58 for resistance at 1.6, 1.61 and 1.62. Confirming below 1.57, it would be supported at 1.56, 1.55 and 1.54.
Thank you, William, for your great advice for our viewers. Remember, if you want to join in with any of the topics mentioned on Dukascopy TV, you can join in on one of our live daily webinars. Take care.